Hello and welcome to this special presentation. Today we are going to get a brief overview on the Department of Labor's new overtime rule, which raises the salary threshold level for some employees, which Kelly Ardman, our human resources professional, is going to cover for us so we can understand who is affected by this new rule and how much the salary threshold is increasing by. Let's begin.
Okay, so the Department of Labor came out with a new overtime rule, raising the salary threshold level as of July 1st, and there's going to be a second phase in January 1st. So we wanted to talk about that. But first, I want to kind of go over who we are about Bergmeyer Associates. And basically, we're certified public accountants. We are the premier outsourced accounting and tax resource in the Southwest. We provide accounting, payroll assistance, tax projection, tax planning, tax preparation, human resource consulting, and wealth advisory. We partner with our clients to reach their success. We do serve a lot of dentists, but we do serve other types of organizations as well. Bergmeyer Associates is a part of the Henley Bergmeyer Group, which Henley Bergmeyer Group, as you probably know us, as a valuations and acquisitions firm. A little bit about me. I'm a human resources professional with the Henley Bergmeyer Group and Bergmeyer Associates, which is an accounting firm. I have over 20 years of experience working in the public accounting environment, and I've worked very closely with healthcare clients, namely dentists, assisting them with their workforce, focusing on putting together strategies, policy implementation, and salary trends and performance management. If you want to reach out to me, there is my contact information there, primarily the email address. And I will give my phone number at the end of the presentation. Here, let's get into this subject. So the overtime rule, it's happening in two phases, or it happened already the first phase, and the second phase is happening January 1st. So effective July 1st, the FLSA, which is the Fair Labor Standards Act, annual salary level threshold for white collar exemptions to overtime requirements increased from 35,568 to 43,888. And then it's going to increase again January 1st to 58,656. That's an increase of 65%. So that's huge. That's going to be something that's going to affect a lot of businesses who use this type of pay for their employees. This can impact your small business in several ways. And the first one would be increase in your payroll expense. Also, your business may need to reallocate funds from other areas, such as marketing, or if you're planning on expansion, to cover these increased costs. Your profit margin will be reduced, and you may want to raise your prices. I know that with dentists, it's really not something that they can do. They can't really increase their rates because they have certain contracts with insurance companies, but in other areas of different types of businesses, you may want to think about doing that, or upselling to maintain your margin. So like offering more services, to help with that increase in cost. You'll also have higher payroll taxes. However, that will be an expense, so you should be able to claim that as a deduction to offset the burden of the tax increase. So who is affected? All workers who fall under the FLSA's white-collar executive, administrative, and professional exemptions are not eligible for overtime pay. To qualify for the white-collar exemption, employees must be paid a salary of at least the threshold amount and meet a certain duties tests. If they're paid less or do not meet the test, they must be paid 1.5 times their regular hourly rate of hours worked in excess of 40 hours in a week, which that is overtime. Key components of the test include the salary basis test, which requires that your employee be paid a salary, meaning they receive a predetermined fixed amount each pay period that isn't reduced based on the quality or quantity of work performed. Additionally, there's a salary levels test, which mandates meeting a specific pay amount, and the duties test. Now, if anyone wants a cheat sheet after the review of this presentation, reach out to me at kelly@myabqcpa.com, And I'll provide you with a cheat sheet that shows that duties test that you can review for your employees. So what should we do now? We need to proceed with caution, because like with everything, there could be legal challenges. There was a legal challenge in 2016, and it was successful. So they did not implement it. But you should begin preparing compliance plans now. However, you should be cautious about rolling it out or implementing these plans, and remain prepared for potential uncertainties. So budget for the increases and plan how to implement the reclassification decisions. This should include training reclassified employees on timekeeping requirements, because you may have to put your exempt employees into an hourly classification. So you're going to have to train them about how to keep time, and also how they're not to go into overtime without permission if that's what your policy requires. Also, be prepared to manage employee relations if any employees are upset about losing their salaried status, because some people may be upset about that. And then also decide whether you want to implement these changes in 2 phases or all at once. So some people don't want to do the 2 phases because it's just a very long process, or you can take both and just put it into one and just do one fell swoop. And then when you're in doubt on whether or not somebody should be exempt or should be hourly, I would very much recommend that you just reclassify them to non-exempt, because you're never going to go wrong with putting a person in an hourly type of position. You're not going to be not in compliance by doing that. And then always remain mindful of state and local wage and hour laws, which may impose additional requirements for exempt status beyond the federal standards set by the FLSA. And that was my presentation. Does anyone have any questions?
What exactly are these employees being exempt from when it comes to their salary?
So a salary exempt employee is an employee who is classified as exempt from overtime pay requirements. So the Fair Labor Standards Act has put into place anyone who is a certain classification classified under hourly is eligible for overtime, which is 1.5 times their hourly rate. And to be considered salary exempt, an employee must meet certain criteria set by the Department of Labor. These are all the things that, I said that I can include in like a cheat sheet, because there are certain salaries that you have to meet, the salary basis and the level, which is what we talked about, that now the Department of Labor has set the increase at. And then there's also a duties test. So you can have a person that's salary and eligible for overtime if they don't meet the duties test, but you can't have them exempt if they do not meet the duties test.
Also, another question I have is, how does this apply to, say, like contractors?
It does not.
Okay.
If you are a contracted employee, you're not paid as a W-2 employee, you're paid as a contract 1099 employee.
Gotcha. Okay. Why would one person be paid salary and the other person be salary exempt? What's the differentiation?
Again, part of it is the salary amount itself. And so there's a salary basis so the employee has to be paid a fixed salary, and it is not subject to reduction based on the quality or quantity of work performed. And it must meet or exceed the minimum threshold established by the Department of Labor. There's a salary level that you must be at or above certain minimum amount, which is updated by the Department of Labor. And that's what we're talking about in this presentation. And it's meant to ensure that only employees with higher levels of responsibility and compensation qualify as exempt. So you have to have like a higher level position. And that's where the duties test comes in, where you have to look at the employee's job duties, and it must primarily involve executive, administrative, or professional tasks, which often means the employee has to have significant authority, makes decisions of consequence and exercises independent judgment in their role. There's different categories. So the categories of exempt employees, like one is an executive exemption, then you have an administrative exemption, a professional exemption, an outside sales exemption, and then a highly compensated employee. For instance, the administrative exemption is an employee who performs office or non-manual work directly related to management or general business operations and exercise discretion and independent judgment. It can't be somebody that cannot make decisions without approval.
Gotcha.
Or like an outside sales exemption is an employee primarily engaged in making sales or obtaining orders, contracts outside the employer's place of business. It's like you're binding the company to contracts. So you have a decision-making ability. Also, the implications of exempt status is that the person who is exempt, they're not entitled to overtime pay for hours worked over 40 hours. They have a fixed salary. It remains the same regardless of the number of hours that they worked in a week. And they typically have more responsibility and discretion in their roles compared to a non-exempt employee. So if you just understand those three things, then that's kind of.
So why is that? Why is a person in a management type role not eligible for overtime pay?
Rachel, that's a really good question. Let me get
I'm
it.
like, you're making a case for someone to not want to move up the ladder, right?
Well, I think that really it's you should make a comparable amount of money if you're at that level. So that's why they're saying that
They're saying you're already highly compensated, so there's no way a business can afford to pay you time and a half.
So what the Department of Labor is doing in this presentation, when I talked about how they're increasing that amount of money that's to be paid to a salary exempt employee, it's to make sure that it is a higher wage than somebody that would be paid like on an hourly basis that doesn't have a higher level of a job. And so if you are being paid or you are being hired to do a job and you meet these qualifications or this test, and so they pay you a salary they exempt you from overtime hours, they're really basically paying you for a job or outcomes, a product or something that you're a deliverable that you're doing for them. So you can figure out a way to do it efficiently and get it done quickly, or you can spend a lot of time trying to get it done with putting in a lot of hours. But they classify, you should be being paid that fixed amount based on the job that you're doing. And if you are an executive making over $100,000 a year, that's a reasonable salary for an executive level position.
So for our clients, the people who this is going to impact are office managers.
It may affect practice managers, office managers in a practice. I don't see it affecting hygienists, assistants, and I don't see a lot of dental practices that pay an exempt salary. I don't see a lot. There are some, but I don't see a lot of that happening. I don't think for our dental clients it's going to affect them as much. But then you have to think too, if you are a dental practice and you're only open 32 hours a week, or you have your employees working 32 hours a week, so you're not even working 40 hours a week, and you look at the salary and it doesn't meet this threshold, and you want to pay your office manager that, you have to at least make this threshold. So then you have to determine what that is. Now, if you don't meet that threshold with what you think an hourly rate should be, and you want to calculate that for a salary, then you should have them as a salary eligible for overtime or pay them hourly. You can't get out of paying them overtime by just putting them at a salary. In New Mexico, you already have to calculate hours worked for the New Mexico Healthy Workplaces Act. Everybody should be using a clock in, out system for that to calculate what hours people have worked in order to accrue those sick leave hours. So you're already doing that for that, even if you're paying a salary. So if you have somebody that's a salary that can receive overtime pay, then you should be paying them overtime if they are working overtime. And then the second thing is that, if you pay them hourly, you're already clocking in and out for that as well. So you're paying them overtime. So the simple way, if you're in doubt of how to pay the person, pay them hourly. That's the default.
If I were to apply this knowledge to our office, do people there clock in and clock out whether you're hourly or salary?
No, it's assumed that you're 40 hours. I'm talking about a dental practice that only works 32 hours a week.
Okay.
The one thing that is positive on the employee part, though, for that is because you are being paid for a job or an outcome or getting paid to get something done, to get a job done, you have a lot of autonomy in that job. Like even though you have to use the tools of the company, you have to be on the schedule of the company, you have to, follow the processes and procedures of the company, you do kind of have a little bit of like, okay, well, I have 40 hours in this week. I have to go to my kid's baseball game at 3:00 on Tuesday. So on Thursday, I'm going to work 3 extra hours to make up that time. When you're an salary exempt employee, those are the things as an employee that you can do and not tap into your paid time off. You can make those hours up as you go for the week. But then there are other weeks in the year that you'll have a project due, and you may have to work 10 hours a day for that whole week just to get that project done, because that's what you're being paid for. You're being paid for that project. Now, us in our firm, we have everybody's on salary exempt because everybody's educated. They have a bachelor's degree or more. They have the ability to make decisions with client accounts. They are executive level. They're paid a lot of money. So we meet a lot of the tests that have to do with that. When you look at a dental practice or something like that, most people who are, you can pay your hygienist, production, you can pay a percentage of production or a percent of collections. You can pay your dental assistant an hourly rate, but it gets to be a little bit questionable when you look at the office manager or the person that's running your dental practice, because that person is making decisions all the time and representing the dental practice with insurance companies and patients and things like that. So you do have to really consider those people when you're looking at this rule, and if you can pay them what the requirement is. If you can't pay them what the requirement is, then you can give them a salary, but just know it's a salary eligible for overtime, or you pay them an hourly rate. There's no rule that says they have to be exempt.